Hi, welcome to the Introduction to Financial Accounting video series. In this video, we will talk about the history and accounting equation. Accounting dates back more than 7,000 years in Mesopotamia. The documents from the ancient Mesopotamia show lists of expenditures and goods received and traded. In 1494, an Italian named Luca Pacioli, who is called the father of accounting and bookkeeping, published a work on double entry bookkeeping, which is the heart of modern accounting. The double entry bookkeeping is a system of bookkeeping where a transaction always affects at least two accounts, one debit account and one credit account simultaneously. And we will introduce this concept in detail in the following videos. And after that, the accounting began to transit into an organized profession in the 19th century, with local professional bodies in England merging to form the Institute of Chartered Accountants. And in the United States, the American Institute of Certified Public Accountants, which called AICPA, was established in 1887.
Next, I'll introduce the accounting equation, which is a core of accounting. The equation talk about assets equals liability plus equity. Assets means what you own, and liability and equity means what you owe. And specifically, liability is what you owe to third parties, and equity is what you owe to stakeholders. And to clarify what is asset, liability, and equity, I'll give some examples. So there are some accounts under assets, include cash, accounts receivable, inventory, equipment, investment, and goodwill. And for liability, there are loans, accounts payable, wages expenses, tax expenses. And in terms of equity, the accounts include stockholders' equity and retained earnings. Retained earnings is a profit held for future use, and we'll discuss them in the future. And now, let me give an example. Suppose I'm starting a business of making donuts, and I plan to invest $100 into the business, and the $100 is cash. So in the accounting equation, my asset cash increased $100, and for my equity, it also increased $100. So it looks like the total assets equals $100 and total liability and equity also equals $100. So the assets equals liability plus equity.